In this video, I'll be documenting my recent stock purchases as well as the monthly and all-time performance of my portfolio. I'm primarily a dividend investor, which means I prefer to invest for dividend income rather than capital growth. There's just something about seeing my passive income steadily grow month by month that excites me way more than seeing my account size constantly fluctuating. I'm currently investing solely within a stocks and shares ISA, so 100% of both my capital gains and dividend income is completely tax-free. My ultimate goal with investing in the stock market is to reach £4,000 per month in totally passive income. There's no getting around the fact that compound investing is slow to start with, and it's easy to lose hope and give up in the beginning. However, for those that do manage to invest over the long term, the miracle of compounding will eventually reward them greatly. I've been documenting my progress since day one with complete transparency so that people can get a feel for how things progress under real-world market conditions, and not by simply using a compounding calculator online with assumed figures. If this is something you might be into, then consider subscribing so you don't miss out on regular updates. The content of this video should not be taken as financial advice. I'm only sharing my own experiences. In ascending order now, from the worst to best performers in my portfolio this month. First off, the worst performer this month is Bluefield Solar Income Fund in the energy sector. Bluefield Solar Income Fund is an investment company that's involved with renewable energy. Bluefield Solar's business model is to acquire and manage low carbon assets in the UK, primarily solar farms right now, with the objective of providing long-term and stable dividend for investors. That dividend currently has a yield of 6% and is paid quarterly. Bluefield Solar is down 2.1% this month, which reduces its one-year gains to 10.8%. Despite this reduction, Bluefield is still one of my best performers to date. The second worst performer this month was the Vanguard All World High Dividend Yield ETF. That being said, I think ETFs are a great option because they provide lots of diversification with just one purchase. This particular ETF contains a massive 1,814 different stocks from around the world. It would be completely impractical to own all of these companies individually. VHYL lost 1.3% this month, but is still up 4.3% on the one-year time frame. VHYL pays a quarterly dividend of 3.6%. I made two new purchases this month, and Aviva in the financial sector was one of them. Aviva seems to be pretty good value right now, with a PE ratio comfortably below the index average and a dividend of 5.6%, which is significantly above the index average. In addition to this, Aviva's medium to long-term outlook looks promising. This is due to the West's ageing population. The ONS estimates that the number of Britons aged 65 or above, for example, will have soared 50% between 2016 and 2035. This is good news for Aviva, who supply life insurance and pension products, which are aimed at an older demographic. Aviva is down 0.9% this month and 16.6% over the last 12 months. However, all is not what it seems. The sharp decline you can see in May of 2022 was simply due to a special dividend paid out to investors. A total non-mover this month at 0%. Unilever in the consumer staples sector is one of the two stocks that I own that I'm currently very slightly in the red with. That being said, I'm optimistic about Unilever's future growth due to the 400 brands the company owns worldwide, many of which create household essentials that enjoy strong brand recognition and customer loyalty. Unilever pays a dividend of 3.6% quarterly and has a history of reliable payments. GSK in the healthcare sector saw some marginal growth this month, up 0.3%. Unfortunately, GSK has recently cut its annual dividend from 80 pence to 56 pence per share due to a demerger and some restructuring. Ultimately though, I think this is the right move for the company to make, and that it will only help the performance in the long run. GSK pays a quarterly dividend of 4.1% and is down 8.8% in the last 12 months. The second purchase I made this month was Diageo. To my knowledge, Diageo is the only UK company owned by Warren Buffett, so I'm in good company. Diageo is an alcoholic beverage company that owns some huge brands such as Johnnie Walker, Smirnoff, Ciroc, Captain Morgan, Baileys and Guinness, to name a few. Diageo has seen steady and consistent growth over the past couple of decades and has grown by 45% or so in the last 5 years alone, compared to the FTSE 100's growth of around 10% in the same period. Diageo has a relatively low dividend of 2.2%, but as you can see on the chart, It's grown its dividend each and every single year since at least 2000 by an average of 6.4%. Diageo is down 2.3% over the last 12 months. Next is the iShares Core FTSE 100 ETF, which mirrors the performance of the FTSE 100, which has been on a bit of a run since the lows in mid-October. This grind higher continued through February, which saw a further increase of 1.7%. The rise brings the one-year total to 6.9%. I do regret not buying more of this one at a great price when I had the chance. You'll see why towards the end of the video. The iShares Core FTSE 100 ETF pays a dividend of 3.5% on a quarterly basis. Tesco, now in the consumer staples sector, is up 2.6% this month. Tesco currently has a dividend of 4.6%, which is paid out twice per year. Tesco is still my best all-time performer to date, having gained around 22% since purchase. That being said, Tesco is still down 10.6% on the one-year time frame. National Grid in the utilities sector is the second best performer this month, up 3.6%. However, it's still down 7.3% on the year. National Grid currently offers a solid 4.9% dividend, and just like Diageo, National Grid has a long history of reliable payments as well as consistent dividend increases. HSBC is the best performer this month, experiencing growth of 5.5% due to a brighter outlook from China's reopening, higher interest rates in general, and the announcement of a potential special dividend. HSBC pays a dividend of 3.5% and is up a huge 28% over the last 12 months. Here you can see each individual stock's performance from best to worst in a nice, easy to read and more visual format. HSBC and National Grid lead the pack. Let's take a look at the performance of the sectors. This is based on the stocks I own in the sector and not the sector as a whole. Utilities leads the pack this month thanks to National Grid. On to sector weighting now. Consumer staples remains the most dominant sector in my portfolio. The addition of Diageo this month has further increased its size. I do plan to significantly increase my ETF holdings over the next few months to eventually make up at least 50% of my portfolio and perhaps a bit more. Tesco has been knocked off the top spot, which is now held by my most recent purchase, Aviva. I invested around 600 in Aviva, which is slightly more than my usual 500. I generally like to invest around 500 at a time due to commissions, which is why most of my stocks are fairly equally weighted right now. When I'm a bit more diversified and own a few more stocks, I'll begin increasing the position sizes of my favourites, and the difference between them will grow. That being said, I would prefer the freedom to invest smaller, more frequent amounts, so I do plan to switch my ISA to a different provider soon. I'm thinking Trading 212, so if you are with them, let me know in the comments if you'd recommend them or not. I've managed to hold back a little cash this month, so that if a bargain does come along, then I have it there ready to invest. I think around 5% of my portfolio is a reasonable amount to hold back for this purpose. Keep in mind that cash is a position too. If it's sat in your account, then it's doing nothing else. This month I added a total of £1,148 to the account. I aim to add around £1,000 per month for the time being, plus 100% of the income generated by this channel once I get to that point. The account gained £52 in real terms once you subtract the money that was added to the account. I've managed to reach the 5k milestone this month, which is the first major one in my opinion. It actually seems to have came round really fast, which is motivating. I'm well aware that I'm not going to be riding off into the sunset just yet, but the 5k mark does signify to me that I can really make something of this if I just stay consistent. I will celebrate this milestone in some small way and then refocus my sights on the next obvious milestone of 10k, which puts me into the 5-figure territory. Unfortunately, I don't currently receive any dividends in February, so no change here for now. I do however receive 3 dividends in March, so look out for the upcoming dividend reveal for the details on that. So far, the total return on investment of my portfolio is 4.6%, which isn't bad considering it's only been a few months and I've only received one small dividend payment so far. That being said, here's a look at how my portfolio's ROI fares against a few popular indexes over the same time period. As you can see, I would have been better off simply putting everything into a FTSE 100 ETF and received around double the gains. However, I should note that my portfolio is made primarily of defensive dividend paying stocks, which tend to remain relatively stable during a downturn, which is great, but the flip side to this is that defensive stocks tend to underperform during an upturn. This does for the most part explain things, as the FTSE 100 has had a really big rally over the last few months, and also hit all-time highs. I did, however, manage to outperform the S&P 500 though, so that's something. It'll be very interesting to see how things pan out over the coming months under perhaps more typical market conditions. If you found any value in this video, then please consider liking and subscribing. If you do have any questions, please feel free to ask in the comments below, and I'll do my best to answer every one of them. Check back soon for the next update, as well as my upcoming video on how much you should be investing each month.